Greetings, everybody. This is Jeff Scott, and welcome to this week's top-down review. I titled today, Will Gains Become More Difficult Here? I will talk about more risk in the market. I will talk about how I've reduced margin, how I'm a little bit more cautious. That is not the same to say that I'm bearish and I expect a 30% pullback. We've been living in a charm market off the bottom in March 23rd of 2020. And, my expectation is it gets a little bit more volatile from here, especially late February, March can be tough times in the market. But volatile could be 3, 4, 5% pullbacks, sort of what we're in right now, or we were in until Friday started. So let's take a look at what I see and what backs that up. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. If you're watching this on YouTube, please hit the up thumb or the down thumb if you don't like it, just so people see that people are watching it. And if you like this and you want to receive notifications again, bad news, I don't keep a mailing list. I got nothing to sell you, so why should I take that time and do that? But if you hit subscribe and the alarm on YouTube, you'll get notification when I post these. Now for the ever-present disclaimer, this is for education purposes only. Anything I recommend is in the spirit of education, not investment advice. I am a doctor, not a broker. I am independent. I pay for the tools that I use. Trading involves risk, and you are solely responsible for any decisions you make. And I do talk a lot about options, and when I talk about options, it's important you recognize that there are authorities, such as the Option Industry Council, that feel they are much higher risk, and I highly suggest you know what you're doing if you trade options. And I refer you to the OIC.com website so that you can learn more about the potential risk. Not going to spend much time here except to say that I owe a lot of thanks to a lot of people where I've learned how to trade from. And this is like, it's like my medical career. I wasn't born a doctor. I was born perhaps with a mother that wanted me to go to med school, but I still had to get an education. I had to work. I had to study. Well, it's similar with trading. You have to get an education. And that's an investment that I've made, whether it's in the courses, the books, the trading videos, the technology, the indicators. And these are some of the folks that I've learned from. And I started with CanSlim, and what I do today probably looks little like CanSlim, but I've tried to do what works for me. And I call my style Be Your Own Guru, suggesting that you need to find what works for you. I own a lot of software. I use TradeStation and Thinkorswim, HGSI, EdgeRater, and I populate the real-time programs with a number of indicator sets, whether they're from John Person, Dr. K, Sagar, and I also use the freestanding Sagar Q tools. I do occasionally bring people in to talk, and often they offer you some type of a special deal. They never pay me a penny. I'm an unpaid volunteer. No one pays me for what I do here. This is just education. The website for highgrowthstock.com, again, totally independent of me, but they do a great job with their technology and their responsiveness. I provide some volunteer, meaning unpaid support to help some of their users. Free 30-day trial here. Under investing strategies, you'll see hundreds of movies by many, including myself. Now, broken record time. Stock patterns are cyclical. In fact, this pattern occurs over and over again in every index, sector, industry group, and stock. And it's a fractal pattern where it can occur in various time frames. Now, we are clearly where this red circle is. Now, that red circle is not fair because it might be the time to sell. And certainly Thursday and Wednesday felt like the market was rolling over. Heck, the S&P 500 was down every day this week. But then Friday came, and even though the indexes were down some, I think the NASDAQ future finished down, I had a major rally on my hands, probably because I'm more married now to the small caps. So are we rolling over here? Or is this Jeffrey saying the sky is falling once again and we're going to take another leg up? Gut feeling, take another leg up. That's why I'm still heavily invested. But that said, there is going to come a time that we're going to get a pullback. But a pullback does not have to be February of 2020. It could be a more routine 3, 4, 5, or worst case 8% pullback. And one thing that we learned from Ian years ago is most of these pullbacks are going to be less than 8%. So since I have some uncertainty, but for more important reasons such as I now have 3 houses, I'm closing on one of them a week from Monday, so I wanted to raise cash to pay for it. And I'm building a house in Santa Fe, which I'll close on it probably a year from now. And then I've got my house in Palm Beach Gardens. So I raised cash this week, but not just because I was concerned about the market, but because I knew I had a big check coming and I wanted to make sure that I wasn't playing with my house payment. I have smaller positions to some extent, and I have sold a lot of calls against whatever positions I have. Now, if the market rolls over, I'll take a much more aggressive stance to the downside, but I'm not sure that's going to happen. Friday, I mentioned, was a strong day, and you can see up here, the Russell and the mid caps were up. The Russell was up 1.93% on the Russell futures. And you can see, although the amounts down were modest, the YM, the ES, and the NQ all traded off. If we look down here, you could see on the various S&P sector group components, materials, energy, so on and so forth, that there's a lot of bullishness. Materials almost are all green. Energy, all green. Financials, almost all green. Industrials, mostly green. You want to see some weakness? Staples and technology have a lot more red than the others do. Discretionary, mostly green. Utilities, red. Healthcare, a lot of red. Communications, sort of 50-50. And real estate had a little bit more green than red. So it was a mixed market. So I must be heavy in some of the groups that were working, and I am. I've got some financials. I've got a bunch of energy. Really loaded up on copper plays with FCX, TECK, and a few others, or play for them. Let's take a look at the major markets in Thinkorswim. Yes, I do the same thing every time I do these videos. Heck, I do the same thing every night when I do my own analysis. Just takes me longer because I'm talking instead of just flying through it. Here is the S&P 500 futures, the ES. Now, again, low of the year occurred on March 23rd. High of the year occurred on Tuesday, and then the market sold off from the high, closing down on that day, and small down the rest of the week. Now, you can look at this, and, we're starting to, once again, stall out here. Now, we've stalled out several times, then we've gone higher. At some point, we're probably going to come down and retest. The 50 here at 37.60 is about 130 points away. 130 points on 30, about 3,900. It's about 7%. See, 5% would be 190. So 4 or 5%. So at a 4 or 5% pullback from here, closer to 10% from the top, would that be a shocker? No, it'd be a normal pullback, as we did here, all along the way up. As long as we stayed above the 50, not to say there wouldn't be pain, but this is a strong uptrend. It's showing signs of a little bit of a slowdown, but it doesn't show any damage here that says we're going down. Got to be aware of it. It's been a long run up, but just a shallow pullback. We haven't even broke the 17-day simple moving average. If I look at the NASDAQ futures, I could say the same thing. Again, the high of the year, all-time high of both of these occurred on Monday. Notice, or Tuesday rather, John Person sell signal came in on the NASDAQ futures. It's done that before and will continue to do it. It's a short-term indicator. But again, we haven't yet broke the 17-day moving average. If we take a look at the Dow futures, let me make this the same story, well above the 17 and the 50, probably even stronger than the other two, have not even turned down much. Again, does that look like a bearish configuration? No, it looks like a continued bull move. Again, keeping in mind that these 4 to 6, 3 to 6% pullbacks back to the major market moving averages occur, and it's a healthy thing when they occur, and we're probably due for something like that. That is much different than the deep dive that we saw a year ago. And I guess we hit the anniversary of that this week. The Russell futures. This one looks different, doesn't it? Looks even better. It was up on the week, which is different than the others. And I guess the thing that really stands out for me is that it actually had a strong bounce off the 17-day moving average, despite having a sell signal come in the day before. This is kind of what it looks like the others might, well, not the Dow looks stronger, but the S&P and the NASDAQ, maybe that's what they're going to do. And that is not a very bad thing if that happens. Certainly, this looks great on the Russell. It continues to be the strength, hence all the green up here. The dollar, let's look at the VIX first. The VIX really going nowhere beneath the 200-day moving average. Thought it was going to come down and start to move down to that 15 range in the past. It bounced a little, but it really isn't doing anything yet. And the dollar, which tried a recovery, is now broken back down below the 50. So the dollar is showing some weakness. So do you see a market here that's rolled over yet? Do you see a market here that's flashing danger? I don't. Again, I raised cash for a lot of reasons, including the fact that I had too much margin and I'm buying that house. But I don't see a market that is definitely falling. Do I expect shallow pullbacks? Absolutely. We probably are due some. We haven't had any bad ones in quite some time. As I look at the weekly markets, again, you could see how far we've come in all the major averages, how the VIX has really gone sideways except for this earlier move here, and how the dollar is struggling. What's underneath the major indexes? Well, one of the big themes that we have to deal with right now is that rates are continuing higher. And you could see on the 10-year and the 30-year, they're not just trickling up, they're shooting up. Now, that has implications across the market. Regional banks, a lot of strength, probably driven by those rates. And it should also help the insurers. Now, we're not at a level where I expect the markets to roll over because of these rates, but REITs, MLPs, utilities, dividend payers, and home builders might be sensitive to these rising rates. So something to watch. Something else that might be sensitive to the rising rates. Let me see if I can bring it up. I don't think I can bring it up when I'm doing this, though. Take a look at margin rates from FINRA. We're at really sky-high levels of margin rates, and that might be something that tips us off, at least in the short term. AD lines, we're just, you can't see very well, but we've turned down a little bit from all-time highs. The colors are the indexes, the Russell 2000 and 1000, but we are just off all-time highs for both. Again, is that a bear market? Could be, and anything could happen tomorrow. But certainly as of Friday at 4 p.m., no. If we look at the NYSE, whoops, sorry about that, we can see that the AD line has flipped over just a teeny bit off of its all-time highs, as has a constellation of long ETFs as listed here. The one thing that's falling will continue to fall, I suspect, based upon the rising rates, is the TLT. And as I said last week, at some point, the weakness in bonds may become concerning. Breadth. Well, I was down on the week. The markets were down. I'm always down or up more than the market because of leverage. And you could see the stocks above the 200 and stocks above the 40 came down from their prior highs, but they're still in overbought territory. The very short-term 3-month new high, new low came from a almost automatic reversal zone, had a reversal, still relatively extended, but has come down quite a bit from where it was. Although it doesn't look like much, that's a pretty big deal, because when I see that signal, that's not a signal that's going down necessarily. But when it was sitting up here at the top of this line, I knew that we had some weakness coming. Now the McClellans, what do I learn from these? I learned that we may have had higher highs on the price, but we're nowhere close on either the daily oscillator or the summation index. We'll see if we get a zero line reject here, which will be bearish. In fact, we can't break above this number here on the summation index is bothersome as well. We turn back every time, as we did on this gain. If I look at the weekly, and these are the things I'm looking for. Extreme readings? No. Last time we had a extreme reading goes back to the 2020 low. Divergence of price and oscillators, we've been doing this for quite some time. Higher highs there and not in either the oscillator or the summation index. And zero line rejects, which looks like we may have one, may or may not have one on the weekly. We'll see what it looks like next week. Buckets. Again, this is where we take all the stocks, S&P 1500, stick Bollinger Bands on them, and look to see how many are above, below the midline, and then how many are showing evidence of being extended to the upside or downside. 72% above, this is off where we've been, bullish but not excessive, and the number of stocks above the Bollinger Bands came in as we thought it would last week to a level that's not a signal. There has been no Hindenburg, and this is very important because, you know, I keep saying that at some point I expect there to be some kind of a correction, and I'm sticking to that idea. And but again, as I said earlier, that could be just a small correction, 3, 4, 5%. It doesn't have to be a major market rollover. Now, the Hindenburg Omen, which is a constellation of math, which is calculated here automatically for me with EdgeRater, when that happens, that's going to be a bad sign, because when you get a Hindenburg Omen, it suggests that there's a relatively high risk of having a more substantial pullback. Now, that's saying that only 1 out of 4 are a major correction. The reason why I watch for Hindenburgs, and if you've watched me for any length of time, you know, because there hasn't been a major correction or pullback since the Great Depression that wasn't associated with either one or more Hindenburg Omen signals. We're all clear on the Hindi, suggesting to me we're not going to see a major pullback. We were not all clear this time last year. Market tone, looking at the Woody indicator here, pretty much bullish across. So even with the pullback this week, the slight pullback, not enough to switch the market. Now, it was an interesting market because it was a clear deviation from the rest of the year, and frankly, from going back to March 23rd of 2020. On the right, you see a report in EdgeRater. So just for some definitions, ERG is something we learned from Ian Woodward, and it's sort of the combination of EPS rank, relative strength rank, and group rank. High ERG stocks and high growth stocks are pretty synonymous. And typically, if you're a growth stock investor, you want to see a curve like this, where the further you are to the right, or the higher ERG, the higher the return. And you see returns here that range from 0 up to 90%. Well, it turns out I don't count the first 3 or 4 because there are very few stocks at that level. But if I go in the middle, clearly from 10 to 40%, you can see that there has been a very positive angle, or what's the word I would use, slope, that demonstrates that this has been a great year for growth stock investors. When you look here, this is return to date in the first 6-7 weeks. This is by ERG group, relative strength group, and group rank. And I want to see EPS rank to drive the higher earnings per share rank, the higher the return. It's somewhat like that, but kind of bouncy. High relative strength rank, the highest return, although there's always some stocks that don't have, the IPOs and other stocks that don't have much RS history can be up there as well. What's weird is the stocks that were distributing at the end of last year are actually outperforming. Typically, it's opposite of that. Now, if we look at this week, we could see something different. So this was January 1st to the 19th. And this is 2/13 to the 19th. The curve is trending down. Bad week for growth factors. The numbers are bigger to the downside than the upside. So that pretty much tells me I'm going to be down on the week. EPS rank, the highest EPS rank had the worst performance. That's not good for growth stocks. Same with relative strength. So this was a much tougher week. Now, if we look at the week, what worked this week? Well, the S&P 500, as you could see here, was down 0.66%. I use that as my benchmark. The gray ones represent Investors Business Daily List, the weekend review, which is 85.85, the IBD 50, the Marcus Smith 250, IBD Live Friday, and IBD Live Watch List, which is a bigger list. We're all down from, well, up a little bit on the weekend review to down from 0.78 to 1.57. The RS line blue dots, which are some of the best stocks in the market, were down 2.26%. In green are where mine fell, and you could see that mine fell in that area of down between 1 and 2%. So as I said, it was a little bit rougher week than we've seen. Now on the right, you could see the stocks. This is a new feature I added, just the big movers. I'm not good at playing these. I'll be honest. My neighbor Kathy sends me a text that says, socket's up 180%. Well, it only matters if I found it the day before and I bought it before I went, before the market opened. And a lot of these are already having their move in the pre-markets, and I don't play the pre-markets. As I go down this, the 9 limited, this is not a penny stock, was up, doubled in price this week, up 107%. Holy shamoly. We looked at Canaan, I believe, last week. I know I did with someone I was on the phone with. Was up 90%. That was a pretty good week as well. eBang, that was one of my picks last week, was up 65%. But if you look through on the prices down here, you can see we have a lot of cheap stocks, but there were some. Star Peak Energy is one that I own. And this is some warrants. I have STPK, which is the common, but it was up considerably. It was up 65%. But you could see some of the players that were up. And again, a lot of single digits on pricing. Now, sector strength, unlike the markets, is showing some damage. You can see some red, and I believe this would be healthcare and utilities. You can notice here you had some downside kahunas and an upside kahuna in the same week. So I would say that at best, that's mixed. On the Q tools, you could see that over the last month, all my sectors have been up. But when I look at Friday action, only 82% were up. So we're starting to see some more negativity. And over the last 5 days, it's a 50-50 play. Industry groups, over the last 5 days, 50% have been down, as has about 50% of the stocks. So this market has been a little bit more challenging this week, perhaps compared to what it's been overall the month. For 5 days, 5 wins, 6 losses on the sectors. Over 10 days and a month, all the sectors have been up. Now, if we look at the close on Friday, we were led by materials and energy. We kind of saw that on my sector review in the beginning where they were all green, or almost all green. If I was to look at both materials and energy, these are the industry groups in them, and you could see I've got 147 groups in my universe, and 1, 2, 3, 4, 5 of these were 140 above. Well, I own US Steel, I own STLD, I own TECK, which is an iron ore, I own FCX, which is copper. They benefited from economic expansion as well as a weak dollar. So we'll see how they do this week. Refiners popping up. That's interesting. I saw several of them made my review. Aluminum, Alcoa was one that popped up on mine. Now, if I run further with the Q tools, the 2 that came out from the top 5 or so that were the most undervalued were Steel Dynamics and Nucor, 2 steel products. Canaries in the coal mine, they look to me like they're rolling over on the short term, and perhaps they're going to come and visit their 50. You probably can't see it well, but their chandelier stop and their 50 are at the same level. It would be totally normal and not surprising to see the canaries roll down, and whether they hold or not, that will be the question. You can see here several times bouncing off. Here they broke through for a couple days, and then they had a lift off of the 50. Know your news and earnings. So we got a couple of Jerome Powell presentations this week on Tuesday and Wednesday, and then we got some jobless claims, continuous claims on Thursday. So a busy news week. Looking at the earnings, still a lot of earnings there. So I know what I own. So I've got Zoom Info on Monday after the close. I've got a pretty big gain in it. I'll probably sell the short puts that paid for the long call and leave my long position in play. Diamondback Energy, I've got some 2 or 3 positions here. I might trim that, although it's been super strong. Home Depot, Tuesday before the open, widely held. So got some builders here. On Wednesday, I owned some big position Jumia. I'm going to roll my calls up and out. Magnite, and which is kind of like TTD, really surprised me with earnings last time with a big move. I've got a lot of stocks, it looks like, with earnings this week. On Thursday, Plug Power, it's sort of bounced on Friday. I've got puts on it, so I don't worry too much. Puts at a much higher price, but it's got earnings coming out. Cleveland Cliffs. Wayfair, which made my buy watch list, so I have to be careful there. Etsy, another one that I have a position in. So this turns out to be a massive week of earnings for me. And then AMC Networks I don't own, but boy, that's one of the Reddit stocks. And if you want to be entertained, go on the Reddit board and read the comments about these people who are just holding on because they believe it's going to be a $100 company. I think the movie theaters were in trouble even before COVID came in. As I say on the bottom here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So a good week for financial and energy stocks. Growth, inflation expectations increased. That wasn't great for growth stocks that were supported by low rates. So the NASDAQ, the Russell, and the S&P fell in the week. The Dow ended the week slightly higher. Interest rates were still low from a historical perspective, but the quick ascent and long-term rates raised valuation concern. And you can see 15 basis points on the 10-year to 1.35. 2-year increase 0.11. I have been in cash raising mode to pay for my new house this week. I started closing positions on Tuesday and ended up the week with my lowest margin exposure probably in a decade. My account took some significant hits early in the week. I made up much of it on Friday, but since I had less positions, I had less positions to make up my losses on. So I got hurt. I'm still up about 1.9 million on the year, which meant I dropped about 4 to 5% on the week. I think I was up about 5% on Friday, so I cut my losses in half. I'm pretty happy where I'm at. I started the year with 3.1 million, so if I use that number, I'm up 61%. But I immediately wrote $500,000 in taxes and a few other things. So based upon that, I'm really up about 73% year to date. And that compares favorably to Russell, which is leading at 14.8, which, by the way, at the end of 6 or 7 weeks, that's freaking amazing. This week, I'll probably take a little bit more out of the market. I have puts on Amazon, and we'll address my gains in Etsy and Jumia and some of those others, probably rolling up and out of options before earnings. Up and out means, let's say I have a $50 call and the price is $75. Well, that means I've got $25 sitting in intrinsic value. I'd rather roll my call up to 70. So now I've only got $5 sitting there in intrinsic value, meaning I can take $20 out and roll it out a different month. Now I'm going to have to pay for that, and I'll often finance that by selling either a deep in the money put, a deep out of the money put, or a deep out of the money put and a protective put, or I might sell a call that's out of the money. Of course, if I get a massive move up, I could get called away, but I'll get the benefits of the massive move up. I do think we're close to some type of a short-term top. We're entering a more challenging time in the market. We have lapped the top in 2020, and most of us have had extreme profits. It might be time to put some of them in the bank. When I look at my 1,000 plus charts, one could sense a change as back to normal plays seem to be breaking out all over the place, whether they're airlines, cruise ships, casinos, leisure REITs, hotels, and teen apparel. While this is a major positive for the economy, it may lead to some pain in growth stock portfolios from this rotation. So this might be a good idea or a good time to right-size your positions, look at rotation, and some of your big gainers maybe take some off. You never lose money by taking profits, in my opinion. So that's the basics. And for those who've been here before, you know that I like to do that review and that I spend a lot of time on that review as well. But I do that same thing for myself every day when I review the market. All right, make sure we size this up the right way. So the first thing I do after that is I like to go, let me just adjust this. One of the problems I have is this is a problem. It's a good problem to have. This is a 5K monitor. and I have to turn it down to 4K to do my videos, but it makes everything change their sizes. Let's pull up TradeStation. And let's go into market force and divergence. And I have a feeling I got a problem with TradeStation here. So let's see. It's been on all day, and I got a feeling it's still working there. That's so strange. I got some extra windows here. I really don't want to turn it off and turn it on. You know what? I'm not going to do the TradeStation analysis this time. So just close it off. All right. So let's go into HGSI, Major Markets Plus. Hit the warehouse view that dumps them up here. Make sure you don't have a filter on. I don't want a filter here. Turn off the filter. Go to top-down view, and I've got 35 major indexes. The top-down view is a balanced thing that looks at price and volume, mostly on day one, some on the 5-day performance, and some on 3-week performance, although that's quite small. I like to look at them ranked by combo, which takes into account multiple factors. And when I see Russell 2000 on top, I know I had a good day, but you'll notice that the Russell 2000 was actually down on the week. So I think I said that wrong before. If I look at 5-day performance, Bitcoin led, interest rates led, transports led. You don't see the things here that are associated with growth factors, although on the week, FANG was up 0.3. Keep in mind that FANG and my canaries overlap, but they're not the same. If I look to the downside on 5 days, volatility and gold got hammered, as did bonds. And if we look down here, when you start seeing ARK Innovation down 1.3, NASDAQ 100 down 1.1 on the week, Russell 2000 down 0.6, you know it was not a great week for our types of stocks, growth stocks. So we look at the S&P 500 here. First thing I look is down here to see, do I have any green or red? This here is called a Eureka. I have one setting for the NASDAQ and one setting for the NYSE. It's calculated on the index. And when I see green, that's sort of a follow through day, suggesting more room to the upside. When I see red, it's a follow through to the downside. If I've been in a long run up or down and I see that color, it tells me we've probably got some exuberance and that a reversal might be imminent. What do I see here? Kind of a flattening, maybe starting to roll over a bit on the S&P 500. As you can see, it was actually down every day. Tuesday, Wednesday, Thursday, Friday. It was a Monday holiday. That said, the weekly bongo is still green. You're still above the 17, 15, 200-day moving averages. Still in the John Person buy. Is this a pause to refresh before we go higher? It could be. Do we run the risk of pulling back to that 50? And again, what would that even be? A pullback from here to the 50-day moving average right here or so would be a 3.2% change. It would be highly normal to pull back to the 50. Now, since I'm heavily an option trader, a 3 to 5% move would hurt me much more than if I was a stock trader. Then again, a 3 to 5 move to the upside does me very happy being an options player. That's the S&P. Very quickly, the Dow Jones Industrial looks even better than the S&P, has not rolled over yet. Everything looks good. Nothing to say about this except to say it's had a long run. It's flattening up here. Does that mean it's going to roll over? I don't know. I think at some point it will, just not today. The Russells we saw at the futures had a nice bounce off of 17-day simple moving average. Certainly looks like it wants to go higher. This looks like the strongest of the group. And then the NASDAQ composite, kind of like the S&P, it's just stalling here. Stalling, if I'm pausing to refresh, and the worst I do is go sideways to down 2, 3, 4% before the next up move, how awesome is that? Look at it off the bottom here, pause, then you had a sideways move here for about 3 months. And then it took off again. These sideways moves are very, very normal. They can hurt, all right? And especially if you try to overtrade them. But right now, all I can say is it's pausing to refresh. If I look at the 50s, IBD 50 ETF, it recovered some on Friday, as did my portfolio with a mobile breakout. Hard to say that that's not bullish looking. If I look at the FANGs, hard to say that that's not bullish looking. If I look at biotech, well, I could say something different. Biotech's in the setting of a pullback, but it just pulled back into the 17, a very normal place to bounce. Now, if you play the 3 times ETF, this little move here, which is not a big move, but let's go from top to bottom. From the high here to the bottom here before it bounced on Friday was a 6.5% move. If you're playing something like LABU, it was a lot bigger drop just because it's 2 or 3 to 1. It's 3 to 1, I believe. What else will we look at? We might look at semiconductors, still very strong and still rolling. If I look at gold, not so good. Sideways is the best thing I can say about it. It didn't fall much on Friday after a gap down on Wednesday and a lousy day on Tuesday, which was a gap down. Gold miners, not so good. Silver, more industrial uses with the market recovery. You might see more for silver, and I think you do. It's above the moving averages, but still at best sideways pattern above. We know that the dollar looked like it was weakening some on Thinkorswim, and we can see that it's confirmed here. Chandelier stop, which means it's in a downtrend after failing a quick uptrend. So the dollar is weakening. The VIX, look at the VXX here, just doing nothing for right now, continuing its way down towards where it was resting prior to last year's run-up. And before I go and look at the bonds, I just want to show you last year. Here we are, late January and February, and you can see the number of Hindenburg-Omen signals we were getting. Now, it's not going to affect the VIX until the VIX goes up, but when you see a lot of these signals, you need to be concerned. We're not seeing any of them right now. Perhaps it's giving me a little bit of a level of complacency. And then the TLT on the bonds. Well, this is high yield. Looks like the S&P high yield bonds sideways, hasn't rolled over yet. Let me just type in TLT. You can see the weakness in the bonds related to the interest rates going up here. All right, next thing I like to look at is the industry groups to see what's leading. And I go to group 7, I hit warehouse view. I popped up another, take the filter off. All right, so I've got 174 groups. Eventually, it's going to work. There we go. If I go to 2-day force, I can see that I have 76 groups that are going up. That's come down a little bit over the 5-day window. I'm at 65, still bullish. 2-day down, I got cable, satellite, integrated utilities. 5-day down, I'll have a few more. 35. So overall, we are quite bullish. Now, I will point out that things like renewable energy, life science equipment, healthcare facilities, large pharma, telecom, medical equipment, renewable energy products, healthcare supplies, commercial vehicles, these are your typical high growth stock groups. So the fact that they're all with momentum to the downside probably explains the weakness that we saw in the week. Let's look at the upside. These are the top groups. Make sure we're ranked by raw combo. 2-day force up. I right click, left click, change to industry group, and it shows me the stocks in the group and how they compare with the average of the group. So Watt is the first one. And, Watt's got that pattern on the weekly. It looks awesome, but it's already run a lot. It's a cheap stock. Its earnings are bouncing around. They are 225, so they're not out yet. So you have some risk there. No question, you had a Bible gap up, closed near the high of the day, and that's something to be happy about. It did trade back down before it went back up. So you had a Bible gap up from a mobile breakout and a squeeze, a person buy, and a kahuna. This is a name, older name, not a lot of revenue, but maybe this is the next alternative energy place that's going to run. I don't usually go beyond the index, but I thought I look at the next two. I'm not a fan of GE. Doesn't pay much of a dividend anymore. Certainly not an exciting name, an old name, but I do like the pattern. Coming out of a squeeze, several mobile breakouts, several pocket pivots, a kahuna, person buy signal. I just look at the earnings and the story, and I have a hard time believing it's got a long way to go. But I do want to call it out and say it's a productive looking pattern. Generac, man, the gift that keeps on giving. I gave it to you at 100. It's now 357, 360. This has been a great performer for me. And even when it was riding around the 50, it was in a nice uptrend. Is it too late to buy? I think so, but if you're holding it, enjoy it. Look at the earnings per share growth coming into the stock, much better than the multiple. So this thing probably goes higher. Just has been going for a while. Its risk is it's real. Consumer electronics. Well, the first thing is you've got some stocks that had some really big moves here. And make sure we're ranking by raw combo. Viomi technology, don't know it. I'm sure some of the people that follow me probably are chasing this. It had a giant move on Friday. I call it a Kathy stock. It's got revenue growth. Have no idea what it does. Internet of Things enable products such as water purifiers, refrigerators, in China. Multiple viable gap ups. I bet it's got a lot of volume on this day. How much volume did it have? Yeah, 27 million shares on Friday when it normally trades 973. I would be willing to bet a lot of money that it's going to do this. These could still be solid bars. And then it will probably bounce around and maybe form a new base. And then when it takes off the next time, talk to me. Right now, I can't buy this. It's too extended. Roku. I don't get it. I missed it. Shame on me. What a beautiful lower left, upper right chart. It's one of the best charts in the market. Look at this weekly. I just don't know how do they make money? They must get money from the apps and royalties when people use their system. Bottom line, beautiful chart. Earnings came out. Initially, they dropped, but are coming back. Just too expensive for me. Microvision. Here's a company that's been around a long time that's had these little pops before. I've chased a couple of the little pops before. It popped again, but this is a much bigger pop. It's another one of these high volume plays. On Friday, 12 million shares, which is a little bit less than normal. If it could settle out here and give me a base, I'll pay attention to it. I mean, you had a weekly base here around 3, which is where it originally came off of. But it's too out of control. A weekly doji. I'd expect this thing to come down, but it may not. Okay. I know last week I was looking at Copen. Copen gapped up on Tuesday. It came back considerably on Wednesday and Thursday and had a nice day on Friday. Application software. I mentioned the 9. Here's a real company. It's been around for a while. And online gaming operator in China. Shocking alert. And what a move. It had 3 million shares, almost 4 million shares on Friday. I can't touch this. It's moved too much. I just wish I would have owned it. I don't. I go on. CPS Incorporated. This is what I think that other flyer is going to do. Big run up. It'll come down, maybe set a new base and get interesting, but not interesting there. Everbridge, big gap up. Broke out of above its chandelier, sideways move. Closed lower than it opened, lower part of the Bible gap up. You could certainly buy this if you wanted to. I'm going to pass. And here's one of my favorite stocks and a big position of mine. I think it's time to take some profits. But look at this run off of a 35 or so base. So what am I looking for? I got in here. I got in earlier. I'm thinking I got in on this gap up here. But this is a stock that's the ultimate lower left, upper right. It's run from 35 a year ago up to 288. It too, I believe, is in the gaming business. Chinese stock, Asian stock gaming, based in Singapore, so it's not Chinese. Doesn't make money, although its revenue has really taken off. This has been a huge performer. It's just tough for me to tell somebody to go buy it now. Toping, ad and service provider, digital advertising, Chinese. Big Bible gap up on Friday. I don't like where it closed. HubSpot, Bible, this is what you want. Bible gap up, and it keeps on going. I do have a position in this, and I think this one's getting ripe to run again. Digital Turbine apps. This has just been a great player, and like I said, I'm speaking my book. I think it runs again. Great earnings per share growth. So there's some nice things to look at. Renewable energy here. I told you Plug Power bounced. It bounced off the 50, which is a great place to see it bounce. It's got earnings this week. I'd be careful. This was one of the darlings, but it was much easier for me to get behind it when I first got into it down here in the 15 and lower range. But here's your mobile breakout, person buy signal, taking out the chandelier stop, and pocket pivots and kahunas. And it just had a massive move. You had another great opportunity to buy it right here. And then boom, and it's pulled right back to the 50. I'm going to watch it, but it's getting more interesting. Now, it's below the average. End phase looks interesting here. It's pulled down to the 50. It actually had decent earnings, but it sold off on them. So this is a constructive place to start looking at it. Ballard Power, one of the fuel cell companies, it pulled back significantly this week. Fuel cell energy, I played this. I actually still have a small position in it. I took most off as profits. And this one also looked good, not from up here, although it's got some earnings per share growth, which is good. Doesn't pay a dividend, not a lot of volume. But Advanced Energy has pulled back to the 50 and going sideways. And I would have no trouble with somebody looking at that there. It's an expensive stock. And similar pattern would be in a cheaper stock, American Superconductor. So there might be some things to look at in energy. Investment management, yeah, I'm playing this one. Here's what's bizarre because of a thing called skew. The reason why my option power is so high and why this used to be 3 point something of margin debt is because I've taken a lot of cash and I've got more cash to take this week. So let's look at Riot here. So Riot is crazy. Pretty volatile stock, but what I wanted to show you was this. It's at $70. You could buy a March $60 put for $19.65, $10 in the money, and sell a $60 call and sell a $85 call for $9.75. So you could basically cover almost half of the cost of a call that's $10 in the money. And this, imagine this is a $15 out of the money March call. That's March 5th. Let's even look at going longer. Let's look at all the way to expiration. It's just, these are so freaking expensive. When I see expensive options, I got to sell them. So if I buy it's at 70. So if I buy a $60 call, it's going to cost me $24 for a March 19th $60 call. And that's $10, $11 in the money. That's $24. I could sell a $110 call, $50 away, 1 month to get there, for $12. So I could buy one that's $10 in the money for $24 and sell one that is $40 out of the money for $12. So I bought a bunch of these. Now I started buying them $30 ago. So I have a bunch of trades that are really based upon what's called skew, meaning that the volatility is up, has higher volatility the further out the call is. If I look at the delta, 44 delta on a stock that is $40 out of the money with 1 month time, that's almost unheard of. So I think there's opportunities to take care of crazy pricing in the options market, and this was one of them. Now, positive skew means they're charging you more money to buy the further out of the money call. I guess somebody thinks it's going higher, but I've sold a bunch of them. So I own stock at 30, own calls at 30, and I've sold a bunch of calls at the $60 and $70 range. I couldn't resist the fat premiums. So if the stock goes to 150 or 100, I'll make a ton of money, but I coulda, woulda, shoulda, because I won't make as much as I could have. But you think about it, you also mitigate half your risk when your short call is half the cost of your long call. Blockchain's crazy. It's tied to Bitcoin. It looked like the move was done and it started going again. Who knows? I'm long. Look at the demand on this thing. This is just insane. And as long as Bitcoin continues to go up stupidly, 35.60 on Friday, this thing's just going to keep going. There was another stock like it that I bought, and that's the only one above, the only one I'm going to look at there. I made a little bit of money on this guy. MicroStrategy, same thing. Andrew Leff of Citron Research came out when it was here and said this stock is going to 700. It's a pure play Bitcoin. They take all their money and buy Bitcoin, and it ran all the way up to 1,200. So he was off a lot, but he was in the right direction. So that was a nice play. I'm not playing that anymore. Semiconductor devices, Applied Materials has been on fire. I guess that will be in the manufacturing. But let's take a look at some of these. Micron breaking out to all-time highs, or at least recent highs. I wonder if it's all-time highs. It's probably not. It was crazy back in the 2000s. Nope. With splits and everything, we are in, well, wait a second. That's not fair. Let me change this chart. Now I'm opening up all, but I'm putting it on a duplicate charting because all is going to just make it tougher to load on a lot of computers. So let's look at it on a monthly basis. Yeah. Well, let's see. We're not down to there. It is. 2000 got up to 96, and it's almost back to that level today. Only took 21 years to get back to where it was in the crazy .com eyeballs and clicks, not revenue and earnings. Intel, yeah, I looked at it last week. I don't like Intel. It's like GE. It's an old name. I don't like the earnings per share growth. It had a very nice week. Cree. On looks interesting here. It's a less expensive player. Great earnings per share growth. a new John person buy. I would rather buy it off the 50 and it's way extended from that. So that would be my only concern. But if the market holds up, it's going higher. So Cuervo is one that looked perhaps actionable right now. I like to take out the chandelier and the PSAR, so it has to move a little bit. But this one looks interesting. Good earnings per share growth. I've been in and out of this one over the years. I should have just been in and not out of it. NVIDIA has earnings this week, so I took my profits. I had a $45 wide, 545 to 590 call spread that expired on Friday. I decided just to take the money off, take the profits, use it toward my house. Earnings come out. It's a high price stock with a high multiple. Marvell, I talked about it last week. It really hasn't done much. It's gone sideways. I still like Marvell. Biotech has been selling off. Novavax. Now, I want to show you why I might be interested in Novavax or BioNTech and why I'm still nervous about Moderna. Novavax, which to be fair is not yet on the market with its vaccine, market cap of 17.6 billion. Moderna, market cap of 69 billion. It's way too expensive. Way too expensive. The last big buyout was Alexion. Alexion is still trading, I believe, going sideways since the buyout, and it has a market cap of 34 billion. Multiple products in the market and a deep pipeline. I think Moderna is crazily priced. I said that before. I shorted it, and it came down nicely. I'm saying it again. Moderna is crazily priced. Doesn't mean it can't get crazier. Now, when I talked about that other stock that was running up, I said it's going to sideways and I'll reconsider. Take Cassava Sciences. Cassava Sciences had a Bible gap up, gap, major run up to $120. And then people realized it's on trial results, not sales, and it came back down. It had great trial results. It's probably going to go again. I based, and I had a new buy signal come in on Friday. I might look at Cassava Sciences if I want to be in biotech. Here's a cheap biotech I know nothing about. I love the pattern, Bible gap up. It's not crazy run away. Traded 18 million shares, so I wonder what the story is there. Here's Moderna. I'd rather short it than buy it here, to be honest. Maybe I'm crazy. Fate Therapeutics. This one is another one that's popped because of news. It's got a 9 billion. All right. Ignore stock prices on a biotech. Go look at market cap. That's high for somebody that has nothing in the marketplace. But again, it had positive data, and if you like the story, it's an interesting buy point with a mobile breakout, person buy signal, pocket pivot, and a kahuna. A lot of hype or interest in Mankind. This has been around for a long time ago. They used to have this, I think, special insulin product. Who knows? They had a lot of issues with former management and leadership. It looks like it's running again. Don't know anything about it. I have a lot of NDAs signed in this place because it's where I work, not Mankind, but in biotech. And so I often play LABU. I've been out of LABU for a little while. LABU is coming down to where it's very interesting. I'd like to see it take out perhaps today's highs if it trades up tomorrow. If it pulls back to the 50, I'd like to see a reason to buy it. But I like to buy this on pullbacks, and it's clearly pulling back. Internet-based services, I love the company. I just can't believe how expensive it is. Trade Desk, $42 billion. Sideways move and breaking out. I couldn't see a more happy chart. Big uptrend. Sideways move. Mobile breakout, new person buy signal off of the 50-day moving average, pocket pivots, kahunas, and a positive improvement in the person market catcher. I love the story. I love the move. I just can't believe how expensive it is. That's my only concern. If I'm a short-term growth trader, it's a beautiful looking chart. Shopify came back on earnings. It looks like it's setting up again. The earnings were not that bad. They were great. Zumai, cloud computing in China, don't know it. Precious metal mining. Comstock went crazy. It was one of the Kathy, have you bought that? It's up 200%. I don't chase these things. I know there are people like her friend who's a great trader and a much quicker trader than me that loves to play these. And something to keep in mind, it had a big gap up here. But if you were playing the pre-market, you could have gotten in the stock at $2, $3, $4 and rode it up to 10. Great move. I can't play those. That's not how I trade. Maybe I'll change someday, but I can't play this. And TECK, I've been in it since 16. I was out it for a little bit, went again. This thing's popping again. Look at the earnings per share growth coming in. Weakening dollar, improving economy, iron ore, and a host of other industrial and precious metals makes this Canadian company very attractive. And then we'll finish here on base metals. What's not to love? Amazing earnings per share growth. High multiple, big deal. And I go to rescue my dog. I'll be back in 1 minute. All right, back to Freeport-McMoRan. I've been in it for a while. I think 24, 25. This is the area I got into it. What I did this weekend, and let me show you. I'm going to pause it, and then I'm going to find it. All right, I wanted to show you here. On the 19th, which was Friday, early in the morning, I closed, if you add it up, it's 50 calls. And they were made calls. So these were not calls that were short dated. These were made calls. And they were 24 calls. And now I had a problem that was all intrinsic money, so $11.70. So I sold my 50 calls at $11.70 and put it in the bank. And I rolled the strike price up to 35. Now, why is that important? Because the delta between 24 and 35, you can't take it away from me. That's my money. I put it in the bank. So now, if I go to FCX, which has had a huge move, and it went up from when I bought it to now it's $37.48. So it's worth money again. But my calls were at $24, which is somewhere probably back in this range. So all the money between here and there, it was paper money. It was meaningless. It's now in my bank. So now I've got a $3, $35 call that is $2.67 in the money. And I may sell a call against it in the $45 range. But right now, I think TCX goes much higher, and I'm running it. So that's what I mean by up. Typically, out would be a later month, but it was already a late month. I wanted to take out as much as I could because of my house. Now, I mentioned aluminum was strong. Here's Alcoa breaking out here. I think this is a great opportunity. Look at the earnings per share growth. Southern Peru copper is another way of playing the copper play. High base. This was a day to buy and gone. These things are getting pricey, and that's the concern. All right, so that was the top 10 groups. So just from those 10 groups, I probably found 25 stocks that I might be playing this week. So let's look at the stocks that I came up with, and I'll see if I want to make any more comments. It's late. I'm tired, and you're probably tired of listening to me. So I actually had 66 stocks on my buy list. And let's see. Freeport McMoran, Trade Desk plug. Now, Carnival Power, this will be one of these back to normal play. This is CCL. I think I bought CUK on Friday. Look at the mobile breakouts from a squeeze, pocket pivots, kahunas, and a new John Person buy signal breaking out from multiple moving averages. Is it a risky play? Absolutely. But if the cruise ships come back together, don't you think the stock is a $50 stock again? I do, and that's why I bought it. Boeing Company. Do you believe Boeing's going to turn around? I don't know. I think they got a lot of lawsuits and other reasons, but it's probably factored in the price. And look at this. Kahuna, mobile breakout, pocket pivot. Here's a mobile breakout. Here's a person buy, pocket pivot, kahuna. And that looks interesting. One of the prettiest charts is Wayfair. Sideways for a long time. If it takes out this chandelier and the PSAR, I think it can go much higher. There's not a lot of overhead supply to the left. Mobile breakout from a squeeze, pocket pivot here, new person buy and a kahuna. The problem is earnings are the 25th. Penn National Gaming, one of my biggest positions, and what a position it's been. I think this one and DraftKings look like they're running again. Online gaming, look at these earnings per share growth. Turnaround play. Who says you need to have people in the casino to make money in gambling? I've got Penn National, I got DraftKings, I got Caesar. Caesar probably is the last one to start running of the three. Spirit Aerosystems might be another way to play Boeing. They make a lot of the components, sideways move, mobile breakout, person buy, pocket pivot, kahuna. And what's interesting about this one is they probably don't have all the lawsuits that Boeing is going to have. At Home Group, a retailer, their stores have been busy by me, probably goes along with all the new homes. Kind of a loosey-goosey chart, but looks like it wants to break out. Intella Pharmaceuticals, this is, again, my favorite pattern. Uptrend, sideways move to the 50, and a breakout with a mobile breakout from a squeeze person and a kahuna. Got to take out a chandelier, and then I might be interested in Intella Therapeutics CS. Don't know anything about them, just like the chart. So I think on that note, I've shown you quite a few. Kango is one I was looking at last week. It's doing that thing where it's going to work its way down. It'll eventually go sideways. And when it goes sideways again, you can get interested in it. It's just hard to buy this after this big run up. Think about all these people here that have lost money. They're trying to get out. If only it goes up a little bit more, I'm going to sell it. So just I'll drop this down here, let you look at the list for a few minutes, and let me change it one way to, so you can look at the industry groups. Regional banks I mentioned look good. That's a weekly chart. Let's drop this down to a daily chart. One way to play the regionals here is Hilltop Holdings, big move up, sideways move, ready to run. Mobile breakout from a squeeze, new person buy, pocket pivot, kahuna. People that follow me know that's my favorite, but you could, not the favorite stock, but the favorite pattern. Here is the ETF for regional banks, and you can see how strong regional banks are. So on that note, I'm going to say goodbye. These are most of the groups that were in the top. My dog probably needs to go for a walk, and you all have a great day, great weekend, safe week. And remember, sideways moves can be healthy, and small 3 to 5% pullbacks can be expected. Take care, everybody. Good night.